The changing economy. We had a fairly large mortgage company back before the crash, and around third and fourth quarter of 2006, we realized that that may turn around, that the economy would probably come to a crash, considering the bad loans that were written, not on our behalf, but on behalf of other investors and banks and such. And so I realized that we were going to have to create a solution for these problems. Hence the name Premier Capital Solutions. We would have to find solutions for this capital that was lent to millions of people that would probably default. And while it was defaulting, it would probably bring home prices down, and people would need solutions, and banks and brokers would probably need solutions for their clients to help to assist their homeowners and clients that were suffering from the crisis. And so we created Premier Capital Solutions in an effort to help homeowners and banks and brokers to save their homes. Homeowners, brokers, banks, those are our clients. We help homeowners in helping them stop the foreclosure process so they're not forcibly kicked out of their house via foreclosure. And we work with a lot of brokers, thousands of brokers nationally, that refer us their homeowners that are suffering because they don't want to deal with a short sale, for example. So they're just hell, from what everybody says. And so we help them out in negotiating that short sale and expediting the process, doing the processing, and banks hire us to negotiate short sales on their behalf. They are overwhelmed with millions of defaulted loans, don't have the right staff to handle their short sales, and so we created, as I said, solutions for all of the above clientele to help them avoid the foreclosure process. Going back to the homeowners, they are, I'll give you an example with, we work with a lot of military personnel. We work very closely with the Veterans Administration, the VA. And then working with the VA and working with military that have to relocate or going through financial crisis, which millions of people are going through in this economic downturn, we are helping them not be forced out of their house via foreclosure, and helping them relocate and start a new life with homeowners. And so essentially they can start a new life once we help them out of the house and say they don't have to foreclose. And with brokers, for example, what we're told repetitively is that they can produce a lot more. Their sales pipeline have tremendously increased because we are taking on all of the work and effort that they would have taken without us, and negotiating a short sale, for example, and getting these homeowners out of their properties without the concern of having be removed with a foreclosure. And banks, we're improving their ROI because we are taking on that work, and they do pay us for that work, but it turns out better for them in the long term with hiring us and negotiating these millions of short sales that they have. So it turns out better for them rather than having an internal staff that handles them. The outlook for residential real estate, I'm hoping, is great, but it looks like it is going to take a while. A world economic crash doesn't heal itself over just a few years. We think a lot of us know that the interest rates have remained very low, which has allowed a lot of buyers to come into the market. And we're seeing, for example, in Chicago and a few other locations where we do business, Florida, Vegas, Colorado, Kansas, just in many other cities and states that we do business in, we're seeing a bubble where a seller can go ahead and it's become a seller's market. They put their house on the market, suddenly they have 15 offers. And that's creating a bubble because people are realizing that the rates are staying low, and I think it's creating some sort of frenzy where buyers want to buy. And some of the underwriting guidelines have also, for loan originations, have loosened up over the past year. And so buyers that were unable to buy over the past 2-4 years are now able to buy. And again, that's creating a frenzy where buyers can buy properties, creating some sort of bubble that we're seeing in some of these major cities. And so the overall is looking I'm hoping for the best with the economy, but we're apparently advantaging it with more lenient guidelines and lower interest rates. So unfortunately, I do think that that may end up bursting again, because we already saw the outcome that occurred 10 years ago or 5 years ago, from lending the lenient lending guidelines that occurred 10 years ago, and we're just doing it all over again essentially. And so we're seeing it improve. Unfortunately, probably not in the way that it should be improving, and I think the overall is going to turn out well. But right now we're seeing a little hike that'll probably decline. What we do is we do this closely with other major banks. We examine the local markets in other cities. Give you an example with a city where we're recently growing is Colorado Springs, because it's a huge military town. And what we do is we analyze market trends, foreclosure trends. We notice where there's a lot of foreclosures. And where there's a lot of foreclosures, just probably because there's an economic downturn. And what can we do to help stop these foreclosures so these banks aren't stuck with these millions of homes in their inventory? So a perfect example where Colorado Springs is a big military town, 4 bases, the Air Force Academy is out there. There's a lot of military veterans and military that get relocated, and suddenly they're stuck having to short sell the property because they owe more than what the house is worth. And so in seeing that foreclosure trend, we went ahead and decided to open up an office over there and expand our business over there, which is exactly what we do in other locations. We examine where the foreclosure trends are and where we can go ahead and assist so that we can decrease the foreclosures that are occurring.